Hello, Lomita. It's September already, the end of the third quarter. The real estate market has and is changing. So stick around a few minutes and we'll look at what would be good or maybe bad for you and your plans. Now, for those of you just can't wait a few minutes, big picture is demand and sales are heading back to pre-pandemic levels, which overall was a strong and healthy market. But now we also have some other economic issues mixed in. So again, stick around and get some more details. Home values here in Lomita went down last month, with the median estimated home value at $968,000. That's down 1.28% over the last month. It's still up 0.92% over the last quarter, up 12.62% over the last 12 months, up 26.74% over the last 2 years, and it's still up a substantial 34.24% over the last 36 months. In comparison, the median home value in Los Angeles is $864,000. In California, it's $784,000, and for the entire country, it's only $346,000. If you want to find out what your home's worth right now, go to housesinsouthbay.com and get an accurate valuation. Hello everyone, Steve Huhta here from housesinsouthbay.com, bringing you the Lomita Real Estate Market Report for September 2022. Now please remember to like and subscribe, and especially share if you find this of value. And please comment below about what you think is going to happen in the market in the next 6 to 12 months, or what concerns you most. It really helps me with research and answering what you find most important. So, looking back in August, we had 37 homes for sale in Lomita. Out of those 37 active listings, 7 sold, and we had another 6 pending. Those 7 that sold range from this 3-bedroom, 2.5 bath, 1,771 square foot townhome that sold for $705,000 to this 2,851 square foot, 5-bedroom and 3-bath home on a 7,495 square foot lot with a 1-bedroom ADU that sold for $1,500,000. Of those 7 homes that sold, 4 went over asking price and the other 3 went for less than asking price. Now, we know that prices going up and down are factors of supply and demand. As we look at the slowdown, it looks to be demand driven. Now, we can see that our listings of 20, this is our supply side, it's about normal for August for the last few years. But our demand side of the equation has changed. We can see that only 7 homes sold in August, which is well below what's normal for the last few years. So the work from home surge and the historically low interest rates are over, and we're seeing it by these numbers. With this change in supply versus demand, homes are sitting longer on the market at an average right now of 38 days. We can also see by this long-term chart now homes were sitting much longer on the market than in the last few years, but actually getting back to a more historically normal range of days to sell a home, instead of the instant sale with multiple offers that we've kind of become used to in the last few years. Now, at the beginning of the video, I said I'd talk about what's good or bad for you. If you're a seller, the good is that you have benefited from a very nice upmarket with a huge amount of appreciation and thus equity which you'll receive when you sell your home. Now, the bad is that the rapidly appreciating home prices are probably over. We will now be looking at a much lower, although more normal, home appreciation growth for the foreseeable future. The bad is also, if you were trying to time the market, it was probably a few months ago. But right now is the closest you're going to get to it. Now, get off the fence, talk to your real estate professional about what is the best strategy to get the most for your home in today's market. This is not the time for hiring a discount realtor or pricing your home like it was a year ago. If anything, what we learned from last year is that demand drives up prices. So let us show you how to present and price your home to get the most demand, and let those buyers drive up the price of your home. For you buyers, the good is if you've been trying to buy a home for a while now, only to be outbid and lose your dream home time after time after time, this market's changing for your benefit. With a lot less buyer competition, it's your opportunity to find a home that's right for you and successfully get your offer accepted. The bad is, the interest rates have almost tripled in the last 2 years, costing you significantly more to borrow money for a home. Now, if you want to see how much more, you can check out my other videos from last August or from May of this year, up above or down below in the comments. Find out exactly what waiting did cost you. But more of the good, buying a home is a quality of life purchase, benefiting you and your family in many ways besides what it costs every month. Yes, it costs you more right now to buy, but once that cost is locked in, it'll stay the same forever. Now buyers, for the last few years, you have all been wishing that homes were not going up in price so fast. And now, to fight inflation, rates are going up to slow down that price increase. So as much as a buyer you may hate the higher interest rates, it was a necessary evil to slow down the market. Something you may not have considered is that rising inflation is actually a reason to buy. A home purchase shields and stabilizes your largest monthly cost, your housing cost, against inflation. Rents will continue to rise with inflation, whereas a home mortgage will remain the same and build equity over time. History also shows that once inflation is under control, we'll probably see lower interest rates, giving you a chance to lower your payments in the future. But don't wait until then. When interest rates go back down, prices will start going back up. Now, my final thoughts are, don't be afraid of all the media hype. No matter the state of the economy, you still need a place to live and build memories with your loved ones. Would you rather be doing that while paying off your own home or paying off your landlord's home? So for questions on the market, how to prepare a home for sale, or if you need financial help to purchase a home, or have any other real estate question, contact me so I can help. Bye for now.